Hi there, Melissa Horsley here with Summit CFOs. I worked with a trade contractor last year who came to me on extension. He'd already missed the April tax filing deadline. His tax person was waiting on him, and his books were, in his words, mostly there. He figured we'd clean things up, he could file the return, and move on. We did clean things up, and in the process we found over $100,000 in deductions he'd missed because an asset wasn't on his books. We also found out that his profitability, the number he'd been running his entire business on for the previous 12 months, was nowhere near what he thought it was. This wasn't a bad contractor. This wasn't a guy who didn't care. This was a successful trade business owner whose books were doing what most contractors' books do, surviving and not informing. And I want to spend the next few minutes walking you through what we found, why it matters for you, and what your own books are probably hiding right now. First, let's talk about extensions, because if you're on one right now or you were on one last year, I want you to hear something nobody else is going to tell you. Filing an extension isn't free. Most contractors think of it as the neutral 6-month delay, and it isn't. And here's what an extension actually costs you. First, interest. The IRS doesn't extend your payment obligation, just your filing. If you owe and you didn't pay by April, interest is accruing right now, daily. Second, decisions. Every business decision you make between April and October, pricing a bid, hiring a guy, buying a truck, is being made without clean numbers backing it up. You don't know your real profit, you don't know your real margins, you're guessing. Third, the mental tax. You're carrying this in the back of your head for 6 more months. Every time you sit down at the computer, there's a low hum of, I still need to deal with that. That has a cost too, even if you can't put a dollar figure on it. But here's the deepest cost, and this is what I want you to really sit with. Filing an extension doesn't fix anything. The books that weren't ready in April are still not ready in May. They won't be ready in June. They may not be ready in July. Because the reason they weren't ready isn't time. It's that whoever's been handling them isn't built for the job your business has grown into. The client I'm talking about, his extension wasn't a tax strategy. It was his books finally cashing the checks his bookkeeping setup had been writing all year. So let's talk about what we found when we got into his books, because I think it's going to sound familiar. One, $100,000 in missed deductions. Not because his tax person wasn't good, because the deductions were buried in a chart of accounts that didn't categorize them properly. Equipment expenses lumped in with general supplies. Vehicle costs spread across 3 different accounts. Subcontractor payments that should have generated 1099s sitting in a generic outside services bucket. When the categories don't mean anything, the deductions get missed every time. 2, his profitability was a fiction. He told me he was running about 18% net margin. When we actually rebuilt his books, his real number was closer to about 9%, half of what he thought. The other half wasn't lost, it was misallocated. He had service work that was losing money and install work that was carrying the entire company, and he had no idea. He'd been bidding service work at margins that didn't exist. 3, he'd been underpaying himself. He was drawing roughly half of what the business could support, which sounds like good conservative ownership, except it meant he had no real owner pay structure. His tax situation was a mess every year, and he genuinely didn't know what his business could actually afford to pay him. Now here's the part I want you to hear. None of this was visible until somebody whose actual job is to look at numbers looked at the numbers. And it wasn't visible to him because he'd been running on what his books told him, and his books were wrong. Here's the broader pattern. There are 5 things this tax season just revealed about your financial setup. Whether you filed in April, you're on extension, or you filed but you're not confident in what you filed. Pay attention, because these are the things that quietly cost you money all year, not just at tax time. Number 1, who's actually doing your books? If tax prep involved your spouse pulling all-nighters, your admin getting frustrated, or you yourself digging through bank statements at 10 p.m., that's not a tax problem. That's a structural problem. The person handling your books probably wasn't hired to do it. They just ended up with it, and it's working until it isn't, usually right around the time your revenue gets serious and the volume gets ugly. Number 2, whether your categories actually mean anything. Open your chart of accounts. If you got line items like miscellaneous, other expenses, general supplies, with thousands of dollars piled in them, your books aren't tracking your business. They're just storing transactions. That's exactly how the client I just told you about lost $100,000 in deductions. The deductions were there, the categories weren't. Number 3, whether you can tell which jobs made money. This is the big one. If you scrambled at tax time or you're still scrambling on extension, I can almost guarantee you can't tell me right now which jobs from last year actually made money and which ones just kept the crew busy. Most contractors can't. They know their total revenue and their total profit, but they have no idea which work type, service versus installs, residential versus commercial, big jobs versus small, is actually carrying the company. Just like my client who was bidding work he was losing money on because the books didn't break it out. Number 4, how you handled owner pay. Did you take owner draws all year and panic about your taxable income in March? Did you true up your salary in December? Are you on extension partly because you don't know what your taxable income should be? That tells me your books were running without a real plan for how you get paid. You're paying yourself based on what's in the bank, not what the business can actually support. That's how contractors end up working harder every year without feeling any richer. Number 5, whether your books are built for decision or just for survival. I'm not saying every small contractor needs full GAAP financials, but I am saying that if your books are organized around whatever gets us through tax season, or for the extension folks, whatever gets us through October, they're not organized around helping you make decisions. The cost of that isn't the tax bill, the cost of every decision you've made all year, pricing, hiring, equipment, bidding, based on numbers that weren't built to inform those decisions. Let me give you something tactical you can act on this week. There are 3 numbers every trade contractor should know cold. Not look up, not have my bookkeeper poll, no cold. If you can't answer these right now off the top of your head, your books aren't doing their job. Number 1, your gross profit by job type, not your overall gross profit. That's almost useless. The breakdown, what's your gross margin on service work versus installs, residential versus commercial, big jobs versus small. If you don't tell me, you're bidding blind. You don't know which work to chase and which to stop chasing. My client thought all his work was profitable. Half of it wasn't. Number 2, your owner compensation as a percentage of revenue. Most trade business owners at your stage should be looking at total owner comp, salary plus distributions plus the legitimate business benefits in a specific range relative to revenue. If you don't know yours, you don't know whether you're underpaying yourself, overpaying yourself, or setting yourself up for a tax surprise. All 3 are common and all 3 are fixable. Number 3, your cash runway in weeks of payroll. Not how much cash do I have, that's the wrong number. The right number is, if revenue stopped tomorrow, how many weeks could I make payroll? Most contractors who answer this honestly get uncomfortable because the number is usually smaller than they thought. Knowing it changes how you bid, how you collect, and when you take on big jobs. If you know these 3 numbers cold, you have books that work for you. If you don't, you have books that survive tax season. There's a difference and it shows up in every decision you make. I want to paint a picture because diagnostics are useful, but the goal isn't to feel bad about your books. The goal is to know what good looks like so you can recognize when you have it. Here's what it looks like when this is working. You sit down on a Friday afternoon, you open your dashboard, you can see without asking anyone, without digging, which jobs that week made money and which ones didn't. You see your cash position and you know exactly how many weeks of payroll it represents. You see your owner pay running on a schedule, not a guess. Your chart of accounts looks like a roadmap of your business, not a junk drawer. When tax season comes, your CPA gets a clean package in February, not a panicked email in October. You make decisions from numbers, not from gut. You bid jobs knowing your real numbers and your real margins. You hire knowing what you can afford. You sleep at night because the financial side of your business isn't a mystery you're hoping resolves itself. That's not a fantasy. That's how the contractors who scale past 3, 5, 10 million actually run their books. They don't have more revenue than you because they're working harder. They have more revenue because they made the book shift earlier, and the books gave them the confidence to grow. Here's what I want you to hear, because I know this can sound like a lot. None of this means you're failing. It means your business has grown past the setup you built when you were smaller. That's a good problem, but it's still a problem, and an extension doesn't fix it. Time doesn't fix it. Hoping doesn't fix it. The only thing that fixes it is changing the setup. The client I told you about, the $100,000 missing deductions, the 9% margin that he thought was 18%, he didn't fix his books because he wanted nicer reports. He fixed them because he got tired of guessing. He got tired of being surprised every spring. He got tired of running a real business with toy bookkeeping. That's usually the moment it changes, not when contractors hear a sales pitch, when they finally get tired enough. So here's what I'd encourage you to do this week. Whether you filed in April or you're staring down September and October, sit down for 30 minutes. Ask yourself those 5 questions from earlier. Try to answer those 3 numbers off the top of your head. If you can't, that's useful information. That's your business telling you what it needs next. And if you're on extension right now, take this as the wake-up call it is. Because the version of you in September is going to thank you for fixing this in May, instead of scrambling again in fall. Book a call and see how we can shore up your cash flow. While you're on the job site, we're on the books making sure the numbers measure up.